away with.
Yeah, they said they were going to improve that so you could play videos and things. I must look into that. I was going to look into that today and
Oh yeah,
just
yeah.
completely forgot.
Well, we
So
are
if you can
live on
play
YouTube.
videos, you can play music.
Yes, exactly.
Mm.
We are live on YouTube. Welcome to you, mates,
Oh,
and
did I
good
swear?
morning. No, he didn't swear. No, you're all right. Your default was intact there. Kumar, good morning. How are you doing, guys? Yeah. So we are looking at the FTSE 100. Just quickly, let's have a run of the markets because they're about to open up. Good morning, Swee. Um, we're about to open up the FTSE 100 now. Yesterday, I was saying that I was a little bit concerned with the down. Just to sort of say, let's load in down. Morning, PL, because the market was still kind of in an uptrend, and it was concerning me, that the oil story was not enough really to kind of drag us down, and so far it's proved to be the case. Now that doesn't mean that it doesn't end up filtering through again, because this is really sort of just a kind of off the back of the Asian session. Amazing numbers from Netflix yesterday. And I wonder whether that's probably going to help a little bit, certainly during the US session. But the daily pivot has been broken through. There's going to be some weakness. There's going to be some bobbing around here, and Jeff was talking about the markets being a bit sideways, and I wonder whether we get that. And even if we end up down at the lows again, there may well still be some interested buyers, because the oil story hasn't. I just think that if we were going to see the market come down off that, we probably would have gapped down again today and started to really go. But there's just no inertia, and there's no appetite for downside
Do you
of
think
any kind
maybe
of.
the market can't believe oil? That can't believe what's happening and just doesn't know what to do with it?
Well, that's quite possible, and also, this. Remember we were watching it yesterday, and all of a sudden the market buoyed to the upside before coming down again. You remember we were watching that, and you said, "Oh,
Mm-hmm.
somebody must be talking." In actual fact, it was Donald Trump, and he was saying about. It was saying that oil, that they're going to be putting together a deal to make sure that oil industry is safe, um, and maybe that's sort of part of it as well. This that there are workers that are out there, that will probably be protected, and we know Donald Trump will do everything in his power to stop the collapse of the oil price. And I was just looking at the oil chart earlier on, and while I was looking at it, I was thinking, you know what, I think there's a decent shout for this to actually put in a bit of a reversal bar down here, on the daily. Now, I'm not saying we should trade it. I'm just looking at it as a kind of barometer for the FTSE. But I wouldn't be surprised at all to see oil just start pushing up again today. This is almost failed a failed grab to the upside, then a failed grab to the downside as we speak. But if we end up above the daily pivot, then we might start another climb to the upside, and then possibly come down for another look at these lows again. But I'm just not convinced that we're going to see too much lower than we've seen with oil in these coming days, and because of that, I think the FTSE's probably, along with the S&P, has got a fairly good shout of holding on to the small gains that it's made today, at least anyway. And I could be well off the mark, but if I am, then there's no big deal. I mean, there's a bit of a gap between this point and this point, 60 pips. But in a way, I think it's still, we're kind of in unsafe territory. What I'd like to do is see if we can get the market up to the top end of the triangle that we were looking at. And at this point, I think we can start looking at shorting again. Before that, I'm not really interested in the short. I'd prefer to let it go. If it's going to go, I prefer to let it go and see if I can I pick it up again on retracement, because this was the issue yesterday. It wasn't that line. It was this line. This was the issue yesterday. That we were right in a buy zone, and that I was looking at a buy zone slightly higher, which is the difficulty. Always going to be the difficulty with timing. I can't profess to be the best at timing the market, but picking direction, I'm normally okay. That's where really my skill is better. I'm much better at picking direction than I am my timing. But it was a little bit lower, and now we've grabbed this area. So really, the market is in a buy zone down here. You know, even though we saw the collapse yesterday, market starts popping down here in the morning. I think we might well see some buyers come into play. Now, if I'm wrong, then I think we will probably we should, sorry, not probably, we should wait for this to break down, genuinely break down. You know, if the market opens and closes down there, then we can try and pick it up on the return instead of so we want to see that. I'm going to draw it with a straight line this time. We'd want to see that and sort of like stop down there and then see if we could possibly look for the downside after that. So we can get some sort of similar price. But as I say, I think at this stage we're probably looking for continued upside just right now on the short term. Now the market, the way that I treat the market is in two different ways. The first way is to look for a longer term move, and my longer term bias is certainly down. But the second way is to make sure that if there are any short term moves that we are able to either take advantage of them or know they are coming. And in my opinion, the short term move is probably still to grab this line up here. You know, I don't know if I was right about the day of the week, but I was just a bit suspicious on the fact that we were moving to the downside on Tuesday with so much, and in week 3, you know, of the month, and you know the point was made that the markets are all over the place right now, and I get that, and I do agree with that too. So you just never know, but it just doesn't tend to, and that's all I can go on. It doesn't tend to collapse on so early in the week. But in saying that, it did collapse when we saw the big collapse initially. That was earlier in the month and earlier in the week. So you know, there's no hard and fast rule. But I just didn't think there was enough data and enough story out there. So for me, this is a buy zone. For me, this is a buy. Is there a buy signal? Let's have a look. Yeah, I mean, touching against this level down here, and possibly giving us some sort of reversal bar. You know, that wouldn't be the worst trade in the world. So we're looking to go long this morning. You wouldn't want to buy off the back of this bar. Let's have a quick look at the barometers as well and see what they are suggesting. What we got? And then I will pass over to you, Jeff, to place the pound trade if that's not going anywhere just right now.
Not
obviously,
moment, mate, no.
if it's ever really important that you just grab on, mate, then just give me a shout.
Mate, I'll just grab it. No,
just grab it.
You got to give it to me.
Yeah.
You're in control.
Yeah, there's certain protections I've got in place. Good morning, Helen. Who is the chap who gave the dread news on GDP yesterday?
Not GDP, GBP, pound.
Oh, on the pound. What, on the news?
One of us must have been one of us.
Oh,
looks like your name's there.
Me. Good morning, Helen. Did I give some dreaded news on the pound? I don't think I did. I did say that the Brexit talks were starting again this week, and that could be negative for the pound. But correct me if I'm wrong. Right, what we got? So market has opened up. Yeah, it's pretty. Goodness me, mate, it is solid. 90% of stocks in positive territory. So we are looking for buys this morning. There's no two ways about it. Now this level down here, what we got there? This level down here at 56.51, so 20 pips below. So if you guys want to put in an order, then it's going to be worth, and I might join you with this as well. It's going to be worth putting your order in at what's yours going to be? Let me just double check your price. I don't risk a lot on this because we are kind of heavy, but it is a worthwhile trade here. Where is it? Just trying to find UK 100 for you guys. Here we go. There we go. So with the UK 100, you are looking for a test of the trend line with the stops at the lows. So test here. At 17, I want to go straight into market and a 50 pip stop loss. So in actual fact, no, don't put the order in. Forget that. Let's see if we can get a genuine reversal bar here. I do like to trade price levels, but I don't think the upside is confirmed as yet. So don't put the order in. Let's wait and see if we can get a reversal bar. We might miss the trade, but I think it might be safer in this instance. But I like this. I think this is a decent price, mate, to see if there's some further upside here, and then look for the upper bound and possibly that monthly pivot. But let's see if we can just get a little push down. Get some sort of reversal bar, and then trade this. So we're going to wait on the 15. That's the price point there. So I guess it might even have a little smack of slingshot about it, mate. I don't know, but let's see. Let's see what happens.
It may. We'll see how it develops. Yes.
Yeah. All right. Well, let me pass you the screen, mate, and we'll go from there.
Roger D. Okay. No, Helen wasn't blaming us. She was blaming the news.
Ah, the news, of course. Yeah. Well,
yeah.
I don't know who that was.
Counterbalancing that, Helen, the breakout trade did okay. So we'll go through that in a tick. For some reason, I can't take the screen, mate. You've got me barred.
There you go.
Rightio. So let's see if we can get it working again today. Righto. Here's the parameters, guys. We've got a high bang on the daily pivot. That's interesting. We've got a low. So last 3 1-hour bars before we open, right? We've got a low here at the bottom of this bar. I'll set the short first. So it will be a sell stop, as always. And the entry will be 10 pips under the low of the last 3 bars prior to London Open, which will be at 1.22746 rounded down to 1.2274 minus 10, 1.2264. G'day, PH. And the stop loss for the short will be 15 pips above the high of that bar, which is 1.2328 plus 15, 1.2343 will be our stop loss for the short and our entry for the long. So just reverse those, 2264, 2343. So this will be a buy stop. 2364, no, 44, was that right? I think so. 2344 and 2263, I think. Might have to check that. Righto, let's see if that's right. Looks pretty closet, doesn't it? I'll just check it. 2274, so 2264. Is that what I put? No, I put 63. I have to adjust that by 1. And this one here is 2328 plus 15 is 43. I think I got that one right. Yep. Okay, so I've got to take a pip off that one. 1.22. Blimey, Charlie. Forgotten again. Holy dooly. 10 off there, Goose. 6.4. And I've got 6.3. Is that right? I think so. Right, I'll fix that up. Okay, so the long is in the market, or in the orders in the market. Short is in the market. Obviously, same applies, guys. This is a beta test mode trade, so do not trade this at any risk whatsoever. If you want to trade it, very, very small, micro lots we're talking here. And once, here are the rules, just quickly. Once we are triggered long, we cancel the short. Once we are triggered short, we cancel the long. And as soon as we're triggered, we go to a 15-minute chart and trail 2 buy bars if we go long, 2 sell bars if we go short. Okay, they are the rules. Now, I'm going to update the spreadsheets.
Decent first 5 minutes, mate, on the FTSE. Might be let's put an order in here. So
right,
you're looking at your
back to
5-minute
you.
bars, guys. Let's see what we got here. We're going to put an order above the 5-minute bar here. Okay, so the market's on the move. In fact, you can buy at market if you want. The main thing is to make sure that your stop's under this price here. So look, but 20 pip stop, buy at market. You just want to get in. It's kind of on the move, and it would have broken your bar anyway. The bar we are trading is a 5-minute bar, and the 5-minute bar is this one here. So just above the daily pivot, still fine to buy at market. You're looking at around about a 20 pip stop loss just to the lows down there. If it comes down again, we'll have a look at these lows and see if there's an opportunity there. So going very light here, because it's a difficult one to trade on a 5-minute very often. So there's every chance we could get taken out. So going very light here, plenty of time by the looks of things, enough price action. 20 pip stop loss means that you can come out at half at the highs. And then just see what happens. I wouldn't move stops. I'd just leave them where they are. Just see if you can give yourself a break-even trade at the highs there, and if that's to transpire, then it will be looking at. I would have thought at least the monthly pivot. If really we want this level up here, so. Let's see what unfolds. If we get to the monthly pivot and there's some price action there that we can make a judgment call on, great. If not, then we'll have a look at this level up here. So it is a long off the 5-minute bar. Price is still there, and you got a 20 pip stop loss. So you're looking at entry looks like 56.85. Stop loss at 56.65. And with the first take profit at the high end of this range, so 20 pips above that, so 57.05. Okay, that's that, mate. Sorry, you carry on. I'll pass you back.
No drama, mate. All good. Trading trumps, as we know. Rightio. Going back to where I was, yesterday's trade was this one. And as always, we look at the 9 o'clock bar, which was there. And then we take the range of the 3 bars prior to the open of London, which is this bar. That's London Open there. So we've got 1, 2, 3. Our stop entry short was at 1.2387. Well, look at that. Can't remember exactly, but it was around about there. And once we got taken in, obviously we cancelled the long order, which was up here somewhere. And I'll answer your question in a minute, Ace. The time to go to your 15-minute charts is as soon as we're triggered. So you swap into the 15-minute charts and then you trail 2 seller bars. If you don't understand what that means, we got triggered in here, right? And then we wait for 2 seller bars in a row. So we're out of the money here. We get taken back into the money here with 1 seller bar, do nothing. 2 seller bars, that's when you move your stop loss. So you then move your stop loss to there. And as soon as you get another 2 consecutive seller bars, you move your stop loss again. So nothing to do here, nothing to do here. But as soon as we get that bar, we move our stop loss to here. And we wait for another one. We got another one there. So we move our stop loss to here. And that's as good as it got, because we then got price coming back at us, sadly, through our stop. And had it not, we would have been able to continue to trail right down to this area here. Now, I will, as I said, show you the updates of how that's progressing. We're actually in a little bit of drawdown on this breakout trade at the moment, and I'll show you that updated spreadsheet in the second half hour. I'll also give you, and I know, and I must apologize, and I can't remember if it was you, Faye, or somebody else who asked last week, maybe, no, I can't remember, about how we calculate the win percentage. As you know, I'm not a fan of counting pips. I'm a fan of counting percentages. It's the only thing that makes sense to me, because pips don't relate to my account, because I don't know what I'll put in. I don't know what I'll put on in terms of risk unless I record all of that. So we will show you how to calculate that. I've done a little formula for you, and I think I can post it in YouTube. I'm not sure. If I can't, you might have to take a screenshot. Ace, to your question, why do we have 15 pips for the top and 10 pips for the bottom? Why not 15 for both or 10 for both? Basically because of the spreads. So obviously when you're going long, you have to nominate the bid price as your entry, and the spreads are added to that. So if you want to get taken in here, you've got to add your spreads. Otherwise, you'll get taken in down here somewhere. So what we do is allow for just a little bit of slippage, really. The spreads on pound US dollar are generally between 1 and 1.8 or somewhere there. But if the spreads widen out for whatever reason, we just add another few pips to that, just in case we get taken in on a bad entry. And that's why we do that. Obviously, going the other way, you have to go through that bid price before you actually get to your entry. So that's why for the longs, we add a little bit more. In my case, I've just nominated 5 pips because I think that's a little bit safer than the spreads, to be fair. It was you, Faye. I wasn't sure if it was you or Crystal, but I've done that for you. I was going to actually do a video for you, but I get tongue-tied doing those things sometimes. And I probably will when I explain this. And we only use a trade that we took yesterday to show you exactly how we calculate that win percentage. When we trial in 15 minutes, do we add in the spread also? Trial in 15 minutes, I'm not sure what, or trail in 15 minutes. You can, yes, absolutely you can. But you don't add 15. You only had the spreads this time, the exact spreads at the current time. So when I say the exact spreads, and you'll know this by going into your market watch and have a look at pound US dollar. Current spread is 23.14, 23.16. So you're around about 2 pips, right? It's a little bit less than that. But just allow 2 pips for your spreads. So go 2 pips above the high of your bar, or your 2 bars, if you like. That would be my counsel. Okay, mate, do you want to go around the grounds, or do you want to come back and do some management, or where?
No, not necessary just yet. We're still, where are we at? We did 20 pips. We're about halfway home at the minute, mate. So we've still got some work to do here to get back up to the our level. But actually, let's just quickly switch to me, because it looks like we might get our take profit nice and early here.
Sounds good.
And you know what I might do? Rather than, there we go. So yeah, we're pretty close to our take profit level on the FTSE here. Now let me just see what we got here. Where's it? I keep losing the UK 100, which is really what I want to show you guys, because I know that's what you're trading. Where is it? There it is. There it is. We're not quite there yet, but looking at this here, we're pretty close. I mean, we're about 5 pips off. 2 things you can do if you get nervous here. Obviously, you could take your profit early, or you could move the stops to break even. That's not really a problem, but looks pretty good. Do you know what I would say though? Rather than leaving the stops all the way down 20 pips below, it was 85, wasn't it? 85, 20 pips below. Push you down to 56. Shove them up. Because the movers started, so you can shove them up at least 2 pips to 56, 70.
These up Mother Brown.
Yeah, get your levels up there. So yeah, let's see. I thought it was going to go. I thought it was going to hit us nice and early, mate, but it's still struggling right now. But yeah, get them up, get the stops up. It'll save you a few more pips if it does decide to turn around and come all the way back down again. Um, but leave that take profit where it is. I don't mind. You know, if you're taking it off a little bit early, but 5 pips, it's not the worst. It's not the worst actually. Yeah, you could do that. But there's the target is this level here. There's the target. There's your target just there. So I'd encourage you to try and leave this trade. I encourage you to try and leave your targets where they are rather than taking it early. But completely understand everybody's different ways to look at the market, and nothing wrong with that. We are ultimately looking a bit heavy from yesterday, so there's a chance it could fail. But I have to say, barometers look pretty good. You know, we have this is an uptrend at the end of the day, and the barometers look pretty good. Let me just give you a quick rundown of where we are on the stocks, and we are currently opening up at 83% currently in positive territory. So as I say, even if it does fail here, then we can look a little bit lower. It just doesn't look like we're going to collapse today. That's one of the kind of like the big aspects, and that's why I think it's well worth taking a punt here and see if we can actually trade this one back up again. Just we longer term look certainly is still for downside, but we are in a buy zone. So in buy zones we try and buy unless the market looks heavy, and obviously in sell zones we flip positions, and my sell zone is definitely going to be either the monthly pivot, or even better is would be if it came and had some confluence of this line. That would leave us what's it now? Today is the 22nd, so tomorrow would be brilliant if we were kind of in this area with the monthly pivot right on top of us together. Could happen, who knows, mate. Sorry, mate, I came back a little bit too early, so I thought it was going to go and grab our level and get us.
You know, as soon as you do that's not going to happen, don't you?
Yeah, and in actual fact, it's probably coming back to. No, it's not. It's just a little bit, weak there. Look at that though. On a 5-minute chart to see an inside bar. I mean, what is this about? This is just expressing how much volatility there is in the market. You see this? Look at the gap between now. Just to explain to you guys what that is, an inside bar starts with a gap. And this was the last price here. I don't know if my cursor is getting in the way there. Let me just show you. This here was the previous close, just there. And this is where the market opened up again, down there. On a 5-minute chart, which means that there's a gap of orders. It means that there's no orders between this point and this point. And that does usually express that there is high volatility in the market. Now, talking of that, sorry, mate. I don't mean to take over here. I thought I'd maybe stay on this while we may get our profit line. I just want to show you one more thing. Oh yes, this is what I wanted to say. The VIX. Now the VIX is moving to the downside this morning, but look at where the VIX is on a longer term time frame. I think this is quite interesting. Where are we at? There we go. This is quite interesting with the VIX, because we had that huge move to the upside, moves back down again, and if we look at the VIX here, it looks like it may have just started to come through a level. Now, this is a volatility index. It does suggest that there might be a little bit more diving back down again, but this really is potentially starting to ramp up again, which is another barometer that we can use for market weakness. So the VIX is looking a little bit sketchy here if you look at this chart for some potential upside. Kind of slow, we're seeing that the bars are nice and slow, but when it's like this, it looks like it could be ready to explode. So be very, very careful, when you're trading anything long really right now, because the VIX is starting to bottom out. We are starting to see some potential reversal signs and signals in the market as well. I'm not sure when it's going to come, but I'm still looking at this market for a potential move down.
No coincidence that since the 23rd of March, and certainly in the last week or so, and this is what I've been seeing with the pivots as well, mate.
Yeah.
The market, because of that low volatility, well, relatively low volatility just compared to what we've seen, has compressed the market as well. That's why we're seeing sideways action.
Yes, absolutely. Yeah. Well, that does seem to be the case, doesn't it? Okay, well, we are still around about 5 pips away from the FTSE's first take profit level. Whether it gets there, I don't know, but it's just it keeps trying. But I know if I flip back the screen again, it's probably not going to go. But I'll do it anyway. This is the FTSE. Your first take profit level is at 75, 57.05.
Come on, get up there, kick it in the ass.
Yeah,
get up, go on.
You got to get to there. You got to get to there. You're not far off. You got to get to there. Go on. Just while we're on, just while we're live on there. You've only got another 3 pips to go.
Couldn't not, could it? Couldn't not.
You know, mate, I've seen them fail here before. I mean,
get up there, you lazy son.
All right. I mean, you're 2 pips away. If you want, you can take half your profit here. Your stop should now be shoved right under this bar anyway. So you've made up your 2 pips. There you go. So 1.5 away. I don't know, mate.
Take the bloody profit now.
Yeah. Well. Go on. There she goes.
There you go.
All right. So you should have taken half your profit. Your stops are slightly higher. So either way, you're actually going to make a little bit of money here. But from here, let's see what happens. If you want to move stops to break even, in actual fact, while it's in this range, that wouldn't be the worst thing in the world either. You know, what I prefer to see is it close above. And if it closes above, then it's fine to move those stops at break even. If it starts to meander around here, maybe it's better just to leave them where they are. But I'm going to leave that to everybody else's particular taste. You know, how you like to trade. You know, do you prefer to kind of put things at break even straight away, or are you more happy to let things run? But yeah, there we go, mate. Bit of profit in the bank.
Nicely done, mate. Good start to hump day.
Good start to hump day. Yes.
Let's see if we can get on the other side of it with some more.
There we go. All right, there you go. Just for you,
Helen. Which part sounds like you? Do you spur it on? Do you when you're trading? Give it some. You know.
Yeah. You've got to talk to the market. Do you know what, mate? I've got to say that it's got to be it's got to be one of the signs of madness, though, isn't it? When you're like speaking to something.
I'm gone years ago.
Yeah,
absolutely. Yeah. But that's okay. Getting the horse to go. Oh, don't talk horses to me. I used to hunt on those stupid things, mainly the slow ones. The pound trade hasn't triggered, of course. Analysis on the pound today for me. Let's go to the daily chart and have a quick squiz. That's my analysis right there. We are at a support level, not huge. Pretty much come off the bottom of this. Well, in fact, we've just, I guess, in many cases, formed the bottom of that channel that I'm seeing there. So I'm actually a little on the bullish side, but I can totally see that we've got the monthly pivot and we've gone into consolidation. I've been shouting this from the rooftops that we're in consolidation and we should be just aware of that and trade the ranges at the moment. That's kind of working pretty well, and I'll show you in a tick how we took advantage of that yesterday. So really what I'm thinking is don't go too far outside of this range that we're trying to break, which is crazy, isn't it? Because obviously we want it to break and go. I'm not sure that's going to be the case. We need something to stir that on. And thanks, PH, for sharing about the Maldane story. Who was, I'm not sure what he does in the BOE, but he's one of the hierarchy, I think. And he was very bearish in his statement yesterday, or speech, whatever he was talking about. I have really no idea, but that was certainly a reason that we saw this bar here, massive sell-off on the pound. It's probably just about the biggest bar in the last what month? Almost, not quite. There are a couple of bigger buying bars, but it was a statement. There's no what I mean by that, the market made a statement, not Maldane, but potentially based on exactly what he was talking about. So I think we're gone into this nice little range. We'll have a look at that on the smaller time frames, and it will look, get over there. It won't look as good as I liked, because I thought we'd see a nice little rectangle sitting here for us. I can kind of see it forming, but I don't really see the lows here that make sense to me. Maybe in there. Okay, we can put that in. So if we use maybe this open close area here to join with that one, that'll probably work. And we've now got a couple of equal highs there. Not completely formed, but in fact, I would get rid of this if we go up to here somewhere. But at the moment, that looks like it will be the range that I'm talking about. Maybe it's bounded by the monthly pivot. That kind of makes sense as well. All right, so we'll be looking to trade this as it comes back inside short. I won't be looking to trade it long until we break the monthly pivot, come back and retest the top of the range. Euro dollar, talking of sideways, and this is good news for us. As I said, if we keep monitoring the tops and the bottoms of these ranges, then we will find something to trade, I can assure you. But at this point, we are bang in the middle of the range, which makes it far more difficult to find a reliable entry, I'll put it that way. There is a strong chance that if we break clear here of the trade line and maybe got up to DR1 or weekly pivot, which is pretty much the top of our range anyway, and then put in a lower high, I'd be interested in trading it back short. The conundrum that I would have will be, if we break here, don't hit DR1, don't hit weekly pivot, don't hit top of range, then come back underneath the trade line and retest it, because that would be a short signal for me, but it'd be in a terrible position. The only resistance I've got is the trade line, and I've got plenty above me. So that's going to be a challenge for me. I think I know what the answer is already. It'll be don't trade it, or if I do trade it, it'll be a very, very small risk. So that's kind of where I'm at on euro dollar. I don't really want to trade it long because we're at resistance. I'd much rather trade it long from support. And I don't want to trade it, really don't want to trade it short until we get up to this higher resistance level. Yeah, dollar yen. Dollar, this is the trade that I'm going to show to you guys when we do the win ratio thing. When I show that to you, what time is it now? I've passed. Okay, we'll wait for a few minutes yet, but if you're in my what's it called, Slingshot group, you would have picked up this trade last night. Unfortunately for you guys in this show, it happened, cheers mate, it happened before the US session and after this session, but it was very, very clear, and it's exactly what we trade every single day of the week. Can you see it, guys? Can you see where we might have entered this yesterday? Because I don't know that there are too many of you in my group, my TTR group, that would have picked this one up when we pretty much traded it live in that show yesterday. Certainly called it live, but it happened very soon after. Nobody want to have a crack at that? Okay, here's how it works. Bottom of the range, we're looking to trade it to the top, yeah? We got a higher low in exactly the right position, but that's not what I traded. What I traded was this. Break of support, hit the next support level, came back above the support, and then retested the support with a what? Bearish decisive bar. So what do we call this, guys? What do we call this scenario when we break a level, come back above it, and retest it? What do we call that? Anyone want to have a crack? It happens that many times a day, it's not funny. How often does a level break out and remain broken? Not that often. You know, there are stats all over the place around this, and you know, sometimes it's you hear 80% of, you hear 90% fake breakout, perfect crystal. That's exactly what that is, and that's how we trade it as a slingshot trader. We wait for it to break, we wait for consolidation, we wait for it to re-enter above the broken trade line. Then when we get the retest with a bearish decisive bar in particular, we place our entry there. We place our stop loss there under normal conditions. False break, yes, perfect. But these aren't normal conditions. So we didn't place our stop loss there. These candles weren't formed at this point. So if they had, we could have placed our stop loss there. But we were safe, right? And this has been my counsel all the way through this global pandemic that we're going through, and then the volatility that we're seeing in the market. Got to get your stops in a reasonably responsible position, and that has to be there. It's got to be underneath the swing. So that's exactly what we did. We had a TP1 just about this level here, and we had our TP2 at this level here. And these are the stats I'm going to show to you in the win percentage formula that I've dreamt up for you guys. So, you know, take a screenshot of that if you want, because that's a classic, absolute classic scenario for us. Exactly what we're looking for every day of the week. And when you hear me say I want to trade long off support, that's exactly what I'm talking about. And when I want to trade a false break off support, that's exactly what I'm talking about. Okay. Now, of course, we are still short dollar yen and have been for weeks, right? Short dollar yen on the bigger picture. Where's that up to? Dollar yen daily chart. That seems to be going okay. Cheers, mate. But you can see the range that we're in, and 1, 2, 3, 4, 5, 6 days we've now been in that range, and that's why we're trading it from top to bottom, right? So we can switch from the daily chart to the 30-minute chart and find trades. Doesn't matter whether we're going with our bias or not. If we see this go into consolidation and we start to see the signals that tell us top to bottom, bottom to top, that's exactly what we're looking for. Same here. I didn't get into a trade here because I can't see a way to trade it, but off the top, lower high, away we go. So which direction do you think I'm looking for this to go now? Short, but I'm not going to trade that because we're in the middle and we've already had our lower high. I'd need to see something far more significant now for me to trade this until we get to the top or the bottom, because it's stalled here. It hasn't given me what we got yesterday, exactly that. So tough to trade on a smaller time frame. So we just leave it alone. All right, euro dollar. I'm on the wrong chart now. I've given you my US session chart, not my UK session chart. Aussie dollar. Aussie dollar is the story of the day, really. And this weird bar that you see here is very, very interesting. I'm a short-term bear on the Aussie because I think it had some more downside, which if you translate that from the daily chart, this was my thesis. Higher high, higher low, higher high, higher low. But where is the low? Where does the low go? In my opinion, it had tons of room to come down to here, and it wouldn't have upset the cycle of higher low, higher high. I'm still of that opinion, and I may yet look to trade that short, but pursuant to what I've just said, I don't want to trade it short off support, do I? So I won't be doing that. Rather, and this is a mess, it really is a mess on the 30-minute time frame. You've got to go somewhere that's a lot cleaner, Even the hourly is a bit, well, it's total mess. But you can see that we've come back inside the range. We're looking for higher lows to trade it. But I don't like the mess here. So it's probably back to the 4-hour chart to look for that higher low. This may well set up as a false break also, as you can see. Break, consolidate. Have we had a re-entry? Well, no, we haven't, not on the 4-hour chart. There's no close here. But this story today is very, very interesting because we had a number come out, retail sales on the Aussie, that widely would have been expected. And I noticed the economists didn't even have a crack at forecasting it. The reason there's a long wick on this is I think the market was stunned by it, frankly. There was a knee-jerk reaction to this number, and the number was 8.2% positive on retail sales, which is an outstanding number. I need to share this chart with you, I think. Let me do that. Share.
I suppose that's the thing, isn't it, mate? It's not only an outstanding number, but considering the climate we're in,
Well, that's
everybody's
why it's an
expecting.
outstanding number.
Yeah,
it's more than outstanding. It's like somebody's hit the wrong button. But
what was the forecast on that?
There was none. No one had a crack at it.
No one had a crack at it. That's interesting. God, look at that.
Because of the climate, I
Retail
suggest.
sales, astonishing.
Yeah, I'm trying to put the chart up, but it won't let me do it.
That can't be right. I mean, you know, you have to go back to never.
Yeah, when Adam played fullback for the Jerusalem, that's right.
Looks like what February 2009 was the highest I can find at 3.8.
Can you see my chart? Yeah, no, you can't. I've got Forex Factory, or I should be sharing Forex Factory. So I think what's happened.
That can't be right.
See, your reaction is exactly the reaction of the market. So as soon as the number hits, right, the market goes, they don't care, they don't think, they just look at the number and they go buy because it's better than it should be. But then the market's had to think about this, I think, and gone, well, okay, what the heck? Or probably stronger words than that. And then it's drawn straight back. My thesis is that because of the massive stimulus that the government has put into the economy, by giving everyone money, and in some cases more than they earn, right? So this is supposed to be a wage subsidy, and those who rock up and get sweet bugger all for doing sweet bugger all suddenly get $1,500 in their pocket. I think what's happened is they've gone out and spent that.
Wow.
Instantly.
Wow.
And I think that's when I say I think, that's the only possible explanation I can come up with.
Yeah.
To suggest to you why retail sales month on month has not just gone outside of normal parameters, it has smashed them. Yes. Absolutely smashed them.
Yeah.
So I don't know. I don't know where we go from here. I don't know whether that number means, and there is a caveat on it, which says, can't remember what it is now. Let me get rid of that. Get rid of that and go to there. Source issued an interim release to cover the impact of COVID-19. What the heck does that mean?
Source issued. Panic buying has kept Australia retail sales chugging along. I'm just looking at that from businessinsider.com. I think that, you know, we're going to need some.
There you go. There's the other reason. Yeah.
Yeah. We're going to need to. I guess it's one of those things that you have to read into, and you're going to need to open up a few articles because there are people out there that are paid just to go and investigate the retail numbers in Australia. So we're going to have to find, you know, an article from one of those people, I guess, before we get any genuine, before we can make any genuine assumptions on this. Have you read that article?
No, I haven't, mate. No.
I'll have a quick scan through it while you're doing your stuff.
Yeah, so it's really thrown this into a little bit of confusion for me. because I was bearish, as I said, based on what I was talking about. Only short term, I'm still a bull, the Aussie. Maybe this is enough to kickstart it back into trend. I don't know.
Well, they've got just reading the very, the top line is a rush to stock up on groceries and alcohol has been one saving grade. They're all out there buying Fosters and Castlemaine Forex, and filling up on food there, mate. By the looks of things, which is, I suppose, not that astonishing.
Well, that it's gone beyond. Did you go back to 2008?
Yes, I had a look. No, yeah.
So different story. And look, I think you guys are right. I think you're spot on the money. It is toilet paper sales. It is.
Well, they'll need it after all the food they're buying.
That's true. And food and booze. And booze has gone up something like 15%. And my concern is, what the heck's wrong with these people? I'm way beyond that. I'm way beyond the 15%. They've got a lot of catching up to do. So I think you're spot on. I think that's exactly what it is. I think that's exactly what the story is. Now, what does that mean, end of day? I really don't know. I think it's just a spike, to be fair. But it looks like the market is saying, no, this is real, we're going. At this point in time anyway. I'm not going to change a thing, but if we get a close above the weekly pivot and then retest the trade line, gee whiz, it's going to be difficult for me not to trade that. But it only has to be just above the weekly pivot because I can see DR2 dead ahead. So yeah, look, a little bit confused on the Aussie, I've got to say. I'll stick with my bias, which is short, but I certainly won't want to be trading it short at this point. I'd want to see it break resistance as always and then come back underneath it. So good luck with that one, working that one out.
Yeah. Well, to be honest though, mate, you wouldn't trade off. I mean, obviously it's an unbelievable number, but we're not going to trade a longer term time frame on a retail sales number, however astonishing it is.
And not in this environment. I mean, it's the same as trying to trade unemployment claims at the moment.
Yes.
Of course they're going to be shithouse. They're going to be dreadful. Yeah. And all employment figures are going to be absolutely horrendous.
Yeah.
So, you can't pin the tail on the donkey with that one, I don't think.
I mean, it is funny though, isn't it? I mean, I had a really good look through some of the numbers yesterday. I was last night. I was just doing some work and updating some spreadsheets, and I found one good number in the last month. One. And yet the market still, is surviving off stimulus. That's really what it's down to. It's completely, it's got this survival off stimulus. What happens when these numbers come out and they are, all of a sudden start turning around? This market's going to go gangbusters, isn't it? It's just crazy. It's crazy. I still think there's. I think there's a serious knee jerk in the offering. I don't know what it's going to be, but I think there's going to be there's going to be tension from somewhere, and I think that's probably going to be the torch paper. But right now, mate, we hold on. Yeah,
look, one thing I can, and along the lines you've just said, one thing I can absolutely almost think about putting, I was going to say a limb or an arm or something like that, but I wouldn't do that because anything can happen. But you would be extremely confident. I would be extremely confident that 8.2% will not be posted in retail sales from this point forward for some time to come.
Yeah,
I'll put it that way.
Yeah,
that's being a little bit conservative. I'll put it that way.
Yeah.
So cable, I think I've done cable, haven't I? Given you my analysis on cable.
So somebody was talking down cable, were they? They were talking down the pound.
Yeah, look, I think we're range bound, and I think that's the way I'd like to trade it. As everything, I've been saying this all week and probably half of last week as well. We're into range. Let's start range trading, and nothing's going to change that until we break out of these ranges, of course. Dollar CAD, we had a good conversation about this one last night at least Orlando had a good conversation about this one last night. He's in
Yeah.
this trade long, of course. And there were a couple of questions around it as well. In my humble opinion, it's exactly the same as everything else. It's going sideways. The reason it has rallied, of course, is the fact that oil has just been obliterated. And I've got no idea if that's zero yet, but it's certainly on the way. And
Gold is on the move.
Gold is?
Yeah.
Or oil is?
Gold is on the move again. So,
Okay.
yeah.
Yep. So, yeah, look, I can't trade this at the moment, even if I had a strong opinion on direction, which I probably do because I'm a massive dollar bear. I can't trade it because of oil. Oil is just, it's going to do zero, maybe even minus, or it's going to rally and rally hard. And I don't want to be on the wrong side of that, really don't. So I think the CADs, all the CADs for me are pretty much out of bounds right now. I want to see something that tells me which direction it's really headed. As you can see, dollar Swissy is in no man's land in the middle of the range and absolutely holds no. Although I suppose if gold is going to rally again, it would suggest we're going risk off again. And maybe if we get below that trade line, yeah, but see, it's come off the bottom. I only want to trade it if it comes off the top short. We'll see. If it takes out the pivots and retests the trade line, then you've got a good case to trade this short, in my humble opinion. But it's got to do that first. And it will only be at low risk because we haven't come off the top of the range. Maybe I'm a little bit liberal with that range. I probably am, actually. Maybe we can tighten that right up. Maybe that's where I need to think. Okay, let's do that. Let's bring it right back. Now it makes more sense, doesn't it? Still, we've only had two little tests of the low, though. It's not the best range I've ever seen, I've got to say. But the trade line now comes into play far better. So, yeah, break under here, retest short, dollar Swiss. Finally, the Kiwi, that is in a good range, has almost come off the bottom, failed to stay below the monthly pivot. That's interesting, not for the first time. This looks very similar to this area over here. I think a retest now of both the pivots, daily pivot, monthly pivot, that would be interesting. What's that look like on the 30-minute chart? Yeah, kind of broken out of the immediate range that we're in. I'd like to see it take out this high, then come back here. Maybe the daily pivot's good enough. We've spent enough time on the monthly pivot. So break here, back to the daily pivot. That would give us maybe some confluence off support. No, I'm speaking well into the future now. That's hours away. Don't really want to trade it off resistance, but it is a potential. Break retest. Yes, plenty of room to the weekly pivot. Don't necessarily hold too much into that high. Maybe it's a consideration. Break and retest, trade to the weekly pivot, take some profit. So that's kind of where I'm at, mate. That's the majors done. We only do the majors in this session, and
Yep.
we do the minors obviously in the US session, which comes later.
Yeah.
I'm ready to have a look at those stats whenever you are, but let's go back to you and see how that trade's going.
Yeah, sure. Well, yeah, let's have a quick look at the stats. The trade. Somebody was asking again about the P&L. If you could explain that one more time, and if you want to do that now or
what P&L? The win ratio?
Not P&L, win ratio.
Right. You want to do it now?
I think it was Crystal. I'll tell you what. Let's have a quick run. I'll let you get ready. Let's have a quick run of this, and then we'll do the win ratio again.
Sure.
Okay, so we are we got our FTSE trade up. Let's get rid of these lines for you guys. Got our FTSE trade up here, and we are nice and we're long in the markets, and we've got some. We have got a stop just down at the low of the bar. In fact, it's at the low of that Is it that bar? This bar, yeah, lower this bar. So that's grabbed us a couple of pips profit anyway from here. Let's just see what it retested and see if we can move stops to break even as yet. It was a 5-minute chart, wasn't it? Well, it's tested our I can't really. I think we're going to have to wait for this one to go in a direction. If it manages to get up and go, fine. But the daily pivot could continue to provide some support here. And if it gives way, then we're going to get taken out anyway. And there's not, I suppose, moving stops up to just under the daily pivot wouldn't be the worst thing in the world. Maybe 5 pips below, because it looks like that daily pivot is now providing some support. So you could move those stops up from the low of this bar here up now to where the bar opened. So you could add yourself another looks like about another 8 pips or something. Now we grabbed 20. So this is just kind of making sure that we can secure a bit of profit on the whole trade, but ultimately we are still looking for higher. So we're not really going to, I'm not really keen to do anything until we get up to. I'm not really keen to do anything with thinking about even closing the trade until we get up to the monthly pivot, possibly even the weekly. And the reason I say the weekly is because of the trend line that's flowing through here. So with that trend line there, it does suggest that the weekly pivot has some confluence. The monthly pivot, obviously being the longer term pivot, will trump the weekly pivot. So that's why we do have to consider that particular space. But I like this trend line. We've definitely got some bounces off the trend line. We're definitely using the trend line as well for reversal. So we'd want to see something similar as we saw here. Get a weak bar in line. If we use this on a shorter term time frame, wouldn't necessarily want to go down to the 5 in an instance like this, but because it would mean that the move has been a little bit longer. The reason we can use the 5 here is the trend is so new. That's the reason we could enter off a 5-minute bar here and a 5-minute chart here. The trend is so new. But if this starts to move to the upside, then really we're then starting to look at the 15 and then possibly even the hourly. Would that give us an hourly uptrend? The questionable hourly uptrend, but we probably want to take our triggers off the 15. Now, if we look at the 15 and how it reacted around these trend lines here, we didn't know the trend line was in play until this point, and when we look at this, we can see that the 15, it just drifted a little bit under that daily pivot. So we could have traded against this point rather than just putting the trade straight in. And it's much better to trade the pattern. And there's a little line here as well. There's the little line, the little breakdown. So when that starts to break down, then that would give us a little bit of confidence that we might well have a trade. But you can see, because this is a sell zone, that the risk to reward is much better, and that's really what I'm aiming for. Where's the sell zone? Where's the next sell zone? Where's a really good sell zone? It could be here. There's no two ways about it. But I still think this is too close to this low for us to be that interested. I think we should wait for it to break and retest if we're going to be trading short anywhere in this area. This monthly pivot is better, but really weekly pivot and that trend line would be the absolute icing on the cake. If we can get up there, then we're starting to get back into the sell zone, and we can really start looking at short-term patterns to see whether we can trade this one to the downside. So that's what I'm doing there, mate. Just to kind of show everybody what's going on with gold. Gold just coming away from the weekly pivot, but when we look at this on a clean chart here and check it on the longer term time frames, this looks like it's turning around. And Ainsley was talking about 1850 yesterday. Now, I don't know enough about gold to know whether that would be a viable option, but that's the trend line there that it probably does need to get through. But if it gets through there, then I'd say that gold is probably on its way back to the upside. You look at this on the shorter term time frames, and we may well be getting a little bit of a pattern here as well. So gold is on the move, and it looks like we're just waiting for it to break and retest, and then there would be a potential trade on gold. The good thing about that, a break and retest of that area, obviously would be also a break and retest of the weekly pivot. So that's going to start looking really attractive. So watch out for gold for the day. I'd say this is something that needs to be on the watch list, and you're looking at around about 1725 for a potential entry if it breaks through and comes back again. So that's what I'll be watching out with gold. Okay, so let's do the win ratio, mate.
Right, mate. Let's do that. I'll give you an update. We have, and thank you, Brian. Yes, we have been entered into the pound US dollar breakout trade. If it's not the worst entry I've seen, it's in the semi-finals, because we're bang on the monthly pivot. We've come back below it, and now we've retested it. You don't want to be trading long here, but we're not adding filters to this at the moment. If we were adding filters to this, I wouldn't have taken that trade. But if it breaks here and closes above it, different story, because we could well be headed up to the 124s. And if that's the case, we'll bank some more money today, which is cool. Let me go through why I'm giving you these numbers. And this was the trade that we took yesterday. As I said, we risked 18 pips on this with our stop loss there and our entry here. The reason I'm showing you this again is because I've based this formula on exactly this trade from yesterday, right? Our TP1 was in this vicinity just before these lows. I can give you the exact level, actually. It was 107.55, maybe 10 pips. No, it was 11 pips, that's right. So 56. No, I think it was 10 pips. So there. That was our first take profit, and our second take profit was $107.75. So that's where we exited the trade, right? So classic slingshot formula, 18 pips of stop loss, 10 pips first profit, 30 pips get out. And that's exactly how we played it. So remember those numbers. You got them? I don't have to remember. It's all good. I will find the formula that I devised for you guys. I don't know if that's going to show up on my screen or if I've got to reshare it. I've probably got to reshare it. I'll just wait till the lag goes.
Yeah, we got those. Make calculating win loss. Yeah.
Okay, look, I don't know if I should go through all these because it's not going to make much sense to you if I just simply read them. You have to associate it back to the chart. So what you need to do is bear in mind that this was, I should have put that on there, shouldn't I? This was dollar yen, 30-minute chart on the 21st of the 4th, entering at those parameters. If you want to check it back to the chart, this you'll have to take a screenshot of, but this is exactly how you work it out. So there's two formulas, number one and number two. Number one is if you do not take TP1. So you're just going straight from entry to exit. So 30 pips. And I've assumed a risk of 1%. I put a caveat in here. If you didn't trade at 1%, then you'll need to divide that number there, which is the calculation of exit minus entry, or profit, if you like, divided by the entry minus stop loss, which is the risk, if you like. So the profit over the stop loss gives you a percentage win of 1.67% if you traded at 1%. If you traded at 0.5%, you need to divide by 2. If you traded at 0.25%, you need to divide by 4, and so on and so forth. If, however, you took a TP1, you've got two calculations. Actually, you've got three because you've got to add them together. At TP1, you need to work out your percentage win by doing this. So instead of exit minus entry, you do your first exit minus entry. So 10 pips divided by the entry minus stop loss, same as up here, which is 18. And then you multiply that by the percentage taken at TP1. Multiply or divide, however you want to put it. So in other words, if 10 over 18 equals 0.56, you need to divide that again by 2. Why? Because you've removed 50% of your risk, which was 1%, right? So you've got to divide by 2. Because you've then got a situation where only half of the 1% has come off the table at 10 pips. So 10 over 18 equals 0.56. Then you divide it by 2. That will give you 0.28%. And that is what you've made on the first part of this trade at TP1. You need to add the second part, which is your exit. So exit minus entry is exactly the same as above, exactly the same as this now, but you've got to divide by 2 this time because you've taken half off the table. And if you've taken less or more off the table, you have to adjust that calculation to suit. So 1.67 divided by 2 equals 0.835, and you add A to B, and there's the result of that trade. How many people are totally confused at this point? The screen's not clear.
Let's have a look at the screen. That might be a YouTube issue more than yes.
All right. How am I going to get this to you guys? Very good question. Can I? Do
you know, I mean, I would say, oh, do you know what to do, mate? I'll tell you what to do. Copy and just select it all and just magnify it. You know, make everything like another 5 up or something.
Will that help?
Yes.
That's the end, right? Oh, you goose. Get back. Get down. There you go.
Maybe a little bit bigger. Yeah, that was the one what you had. Yeah, go up. One more.
What?
That's it. That's fine. Go up at one more. Go to the top point. That's fine. That's fine. Now everybody should. I can read that. That's it. Right there.
So can you screenshot that, guys?
Yeah, I'd screenshot
share on
that.
Zoom. Can I share on? You guys aren't in Zoom. You guys are in YouTube. Telegram.
Yeah, no, that's readable, mate. That's readable. I think
Is it okay?
I think the screenshot of that should be fine.
So do you understand it, guys? And if not, then I'm sorry, I can't explain it any better than that. But it relates, as I said, to the dollar yen trade on the 30-minute chart that we took yesterday. Hand, phone, take a pic. Yeah.
Yeah, that'll do as well.
Good with that? Everyone who wants it, that is. Not everyone might want it. Nobody's complaining. So I guess we're okay.
Good. Yeah, that looks good. So everybody can take a screenshot of that, and then maybe we can run it again tomorrow when everybody's read it through.
Okay. So why do we want to know that is, of course, the next question. And very, very quickly, I'll just show you where we're up to with the breakout trade. Now, this is going to differ to some of you guys for a very good reason. And the reason is this. Because I go for dinner break as soon as we get out of the show, and generally I have long dinners, generally don't come back for a couple of hours, what happens is sometimes I miss the trail. Now that can work for and against this, of course. So I'm not exactly sure where we're up to in your terms, but it should be very close to this. I think I've missed a couple of trails, but I can't remember if they winners or losers. But should be very, very close to this. And this is showing us that we've had 5 winners and 4 losers. Unfortunately, because of this little chap in here, we took the full 1% loss. And I'm not trading this at 1%. Again, sorry, I should have made that very, very clear. I'm not trading this at 1% because it is in beta test mode. And I wouldn't trade this at 1% for that reason. So and this model is based on if we were trading it at 1%, right? So it will be accurate in terms of the percentages. But if you're trading them at 0.25%, you'd have to divide by 4, obviously. Simple as that. So we're not in a great position, or we're not in a hopeless position. As I said, there's no filters being added to this at the moment, but you would expect 5 winners and 4 losers to have you well in front if the system is working. So the system isn't going very, very well for us at the moment. That's fine. This is only a very, very small sample. It's only, what, 4, 7, 9. We want, probably 3 or 4 times that before we make any decisions on it. So I thought I'd just share that with you to show you where we're up to. And that's why we want, the reason we're doing this formula is because that's what we want to know. We want to know this. Doesn't mean anything to me to count pips. This means something to me because it tells me that I'm 1/3 of my account down by trading this. That's what it tells me. Okie doke. So if there are any questions around any of those stats, etc., what keeps me awake at night, Helen? That's only for a US session. But I'll give you a hint at what keeps me awake at night this night. And it's got a lot to do. Oh, I can't remember what I was going to tell you.
Obviously doesn't keep you awake that badly.
That's a good one, isn't it? Oh, no, it's about horses. That's right. It's about horses. I've got it.
It's about horses?
Yep.
That's what keeps you awake. Okay. All right.
Should I share?
I'm not sure whether we should even cover that in the US session, Jeff.
I'm not that cruel. I'll have to share it with you.
Yeah, go on.
Did you know, and it's kind of weird, but kind of tells me a lot about the world today. 100 years ago, every man and his dog owned a horse, and only the rich people had cars. Today, everybody's got a car, but only the rich people own horses. Doesn't that say a lot about our society?
Yeah.
I think it does.
Yeah, I think you're probably right, mate.
Lazy bastards. That's what it means.
Yeah. I'll give you another one. Maybe 200 years ago, aluminium, maybe more actually. No, it would have been almost almost 1,000 years ago. Aluminium was thought of as a precious metal. So it's the flip of that. Only rich people owned it.
Yeah, there you go.
Now everybody owns it because they realised it was completely useless. Well, not useless.
And just like oxygen the other day, it's poisoning us to death.
I still haven't come up with an answer to that one.
All right, now I've got to work on another one for tonight, Helen. Thanks for that.
Okay, sorry, PL. PL's asking something, but I'm not sure what it is.
No, I can't see it either. What's your question, PL?
Not sure what the question is. FTSE 100 continues to push to the upside. We're still quite a few pips away from the monthly pivot, but that trade is holding firm at the minute. Pound dollar breakout.
PL, when I first joined you on your breakout trade on the demo account, I got wins of 200, 400 daily and 1 for a week. Why? What was the week, PL? That's a bit of a hard one to answer. if I don't know the week.
Oh, you forgot to trail. Oh, grey winds. Ah.
I love it.
Oh, there you go. Maybe that's something else to test out.
That's exactly why I love it, because you've just hit on something that may be exactly what we need to know. Maybe the breakout doesn't need to trail on a 15-minute chart. Maybe it needs to trail on an hourly or a 4-hourly or something. That's why we're doing what we're doing, mate. Thank you for the info. I like it.
Yeah. Yeah. You'd want to check it over a course of 3 months, PL, just to make sure that was accurate. But maybe you can do a different beta test. That'd be great. Okay, so let's wrap it up, Jeff. We'll be back tomorrow, same trade time, same trade channel for the last show of the week. For those of you in,
can you ask me that tomorrow, please, mate? Happy to show you.
Oh yeah, great, yeah. All right, I'm going to write that one down. What's the difference between false break and ABC? Okay, difference between false break. Okay, I'm writing that down for you, Ace, as well.
Essentially, it's which side of the trade line you're on. That's all.
Okay. All right, guys. Well, we will be back tomorrow, same trade time, same trade channel. For those of you in the US show, I will see you guys there, as will Jeff. Otherwise, we'll see you tomorrow at 5 to 8.
That's a date. Don't be late. See you guys.